Good morning. This is Larry McMillan with a stock market update on Monday, May 8th. So last week we saw a couple of potential volatility producing events with the FOMC meeting and the unemployment report, and both did have short-term volatile reactions, but then after that, not so much. So we're still stuck in this trading range. We're bounded by 4,200 on the upside and 40.50 on the downside, and we don't seem to really be able to break out of that narrow range. Even the entire year this year, we've been bounded by about 3,800 on the downside and 4,200 on the upside. So there's a lot of indicators giving signals while we're in this range, and we're getting short-term, small gains and losses from them, but we're not getting any momentum trading like we normally had seen last year, for example, or last couple of years, really. So, we're dealing with this trading range, and it is what it is. Eventually, it will break out, and then we'll have a momentum move of some sort. So the equity-only put-call ratios remain on sell signals. That is one of our more bearish indicators. That's nothing new. They've been on sell signals for a couple of weeks now. The breadth oscillators have rolled back over to buy signals, as breadth was very strong on Friday. But as we've mentioned many times, these oscillators are subject to extreme whipsaws, and so we're not really trading that right now as a viable indicator while S&P is in this trading range. The new highs and new lows, we're still seeing more new lows than new highs, so that indicator remains somewhat negative in terms of outlook for stocks. VIX, on the other hand, has given a new buy signal. We call that a spike peak buy signal, as it rose up last week in advance of the unemployment report and then fell back shortly after that. So that is a new buy signal, and we have a long and profitable track record with that signal. So we are taking new positions now based on that. There will be stopped out if VIX goes back above its most recent high at 2133. Where the constructive volatility derivatives is also back in a bullish mode now that those two events are over with from last week. And so the whole volatility complex is modestly bullish for stocks. But overall, the dominant thing is still this trading range, so we don't have a core position because of that. And we're taking individual signals as they occur. So I invite you to visit our website, take a look at our daily newsletters. And also, we just wrote a new article in the Option Strategist newsletter about the new VIX one-day index to be used for trading of the zero data expiration options. You might find that interesting as well. In any case, have a great week trading.